I do want to highlight the market itself and get to Liz Young, because we have been up for 5 straight weeks.
Okay.
And we're waning just a little bit in where we opened to where we look now. The S&P, as I last saw, dipped negative a touch. There, it's basically on the flat line. The Dow right there is hanging on by 47. There's the NASDAQ, which has had this incredible run, 10 days up in a row, going for 11 today. Small caps, we know about those too. I mean, they've been at record levels, and the Russell 2000 is up by more than 13. So Liz Young, I've got this new price target now from Piper Sandler. They say stocks are firing on all cylinders. They start to look into next year, and they put their first price target on for next year for the S&P. They go 51.50. It's about 9.5% to the upside from now. Just give us your view of where you think we are now, because there was a time not that long ago you were a little cautious, and I think you came around and said, well, maybe the environment's actually changing and going to lead us into next year pretty strongly. What do you say?
Well, so first of all, even 9.5% up from here, let's say we get another 2% this year, that's 7.5% next year. That's a pretty normal environment for stocks, which would be semi-disappointing compared to what we've seen, double digits up over the last couple years. So I think investors would look at that as a tiny disappointment. But I do think that there's a tailwind into year end. And you're right, I did come around. I also think if you just listen to everything that the other traders have said already at the top of the show, obviously there's a rotation going on. I don't think there's anything more indicative of a rotation than what we heard about all of these moves that were made. Maybe some of us think the rotation is in different places, but there's definitely something going on under the surface. There's a lot of repositioning happening. Also, I think investors need to keep in mind there's been a momentum shift, and I think Joe would agree with me here. Don't fight momentum in the short term. There's been a momentum shift from about August, September until now. So in August, September, momentum in growth had slowed down, economic momentum had slowed down. Now we're heading into the end of the year. We had a Fed statement that didn't freak all of us out. We have a 10-year that didn't go off the charts. And we've got this Santa Claus rally, this seasonal period that should be strong for consumers. And we should make it through the end of the year with fewer bumps than I think all of us expected maybe halfway through the year.
I'm guessing, Joe, that your counter to that would be, look, I'd rather be early than late. That, I'm stepping out of the way, even if I think momentum can continue. Remember, we're in the period of the year where the next 3 months are traditionally the best. So you've got seasonals are on your side, too, to continue momentum. You're willing to miss out rather than wait too long?
Yeah, I think that's fair, but I agree with Liz's points that I think there is a dramatic shift currently unfolding in the market. You mentioned before the Russell making an all-time high. Well, it just did that in the last several days after, for the better part of the last 6 months, going sideways. So we're seeing this dramatic change, Scott, where finally there appears to be this broadening out of the potential for there to be a revival in economic growth after a period where we slowed down. And I think what's important, too, is that the earnings season really began on October 13th. You've got the S&P up about 7.5% since then. And I think that's the story underneath the market, is that the expectation was, because of the pressures from rising input costs and wage pressures, you'd see margin compression. There were estimates for 100 basis points of contraction for profit margins. Well, profit margins have actually expanded by another 75 basis points to an all-time record high. So I think this is really about a broadening out, and a lot of the places where potentially you could say I was hiding in a lot of the growth stories, I just see those as maybe becoming somewhat exhausted, and it's time to think about unlocking some alpha in some areas of the market that hadn't been performing for the last 3 to 6 months.